Hi guys, I'm just doing this video to give everyone an idea of potentially the strength of trading with volume. Now I've seen so many discussions about volume, so I thought it was only fair that I work through this example of volume. So I'm going to detach this chart so we can actually stretch it out a little bit and see what the deal is with volume. So let's take a look at here. What I've done is I've taken all the volume spikes. This is what's known as institutional money. So this is a footprint really, because this sort of volume can only be generated by very large institutions who put an awful lot of money into the market at one point. Now they go through several phases of accumulating assets, so they don't do it all at once. So they come into the market and buy a little or sell a little as and when they need to. So let's have a look here. So we got the first volume spike here. So right here we see a pretty widespread red candle, right? So if we were to put a parallel line on the high and a parallel line on the low, that would pretty much suggest an area of with support or resistance, as the case may be, because a lot of people have put a vested interest in this particular stock or asset at this particular time. So what we've got here is selling volume, and then we see the price retreat upwards, but as we can see the volume's falling away, which is just suggesting this is market maker activity, just pretty much looking to lock in buyers to pretty much accommodate some more selling. And sure as hell, selling volume returns here. So what I've done is marked out, we've got a massive volume spike here, which is masking itself at the moment as a green candle, but this is really selling volume, and we can pretty much get an indication from the very long tail. So we've got massive volume seeping in here, which most of it is selling volume. So I've got done a couple of parallel lines here. Now what we're looking for is a break below the last low of the volume spike. So we've got the volume spike here, and we've got the low here about 172.41, and price broke on what I would consider strong selling volume here to 172.30. At this point, this is a very good entry point, and if you would notice, this becomes a point of resistance. So now this level's pretty much broken, so we've confirmed that the volume that came in here from the institutions was selling volume, and it's going to depress the price pretty hard because it's pretty big volume. As we can only see, we see only two of these volumes over a long session. This is a 15-minute chart, so over a couple of 15-minute sessions we don't see that at all, because all activity here would be retail traders, people like us, buying and selling as normal, and the institutions have left the game as they have put in their line here. This may only be part of their line, and this might have been the second part of their line. So now they're pretty much locked in, and then we see the price start falling. Miraculously, it keeps falling, but again, they've only just put in one line, so you're not going to see several selling lines appearing, which would continue to show high volume, so the volume starts to taper away as the price drops. Now this gives retail traders an opportunity to do some buying and push the price up, but note, there's a vested interest at this level, so it's highly unlikely that price will come back to breach 172.40, because that would mean that these guys here are in danger, and they're probably messed up. But they don't mess up, that's the point. So essentially this level will hold, and it's a strong level, and it actually corresponds, if you look very carefully, to the initial selling volume that came in here. So this now is actually forming a very strong resistance line. So this is where any stops, if you buy at that level, would need to go. I mean, preferably you'd want to say you'd put all stops above here, just in case you get price going through the first level here, but not necessarily breaking and going above. So just to protect your capital, you want to put some stops here. Yeah, and there we go. So the price keeps going down, and then reaches, sure as day, 172.30, not too far off from the 172.40 level, and then rebounds, and then we get a slight volume spike round about here, again with selling volume. but we're not going to count this because, in my opinion, I think it's a very weak spike, but a spike nonetheless. And we see volume start to come in, and price starts to continue to fall. Now we see increasing volume as price is falling. This is probably retail traders realizing that actually this price is not going to go up. There's going to be no rebound here. This is just going to go down. So we see a lot of retail trade money popping in here, and it feels like it's at the bottom of the selling movement because they're all late, where the real action was up here. Everyone seems to have jumped in around here, so we've got a lot of selling volume here, and then we've got another selling volume spike right here. Now this suggests that maybe institutions have just decided that, you know what, we're going to add another line, but we can't really tell what kind of volumes come in here because we don't know. And what we can see here, that this volume came in on a green candle, and there seems to be a lot of activity. Now in my opinion, this is buying volume. It looks like it's selling volume, but it's really buying volume that has started to seep in. So the institutions are probably deciding to sell out at this point and start buying again. So this is probably what's happening here. And then we get a break above this level, and we see strong support at this level here. So it's a good place now to buy and put any stops below 171.21, because obviously no form of analysis is 100% accurate. But at this point, you would think this is a good bet. So it'll be a nice opportunity to buy and then kind of put a stop below and then just kind of wait. But then we see the level, of course, break above the initial volume spike and then keeps going up. But this is lower volume, so we expect the momentum of this move to not be as strong as the momentum on this move. So we might see price rise possibly to maybe 171, or it might even push further to 172 on the moving average and then rebound again downwards. But we don't know yet, so we would have to see if any more volume comes in to complement the volume that came in here. But this is no doubt is probably buying volume, and sure as day we start to see some support forming around this region here over several sessions. And towards the end of the weekend session, we see what looks like some kind of doji forming here, and we take the idea that this might be buyers just trying to come in now, and this might send the price upwards. But we don't know, because as we see prices rising and the volume's falling off, so everything is resting on this level here. So we will need to see if more volume comes in, and if it does, then we might see a break of the 200 and price start moving upwards. It may well not be enough to take the volume here. It might not be enough to break this entire resistance that is probably developed here. But since a lot of this is retail trader money, all we need is another institutional spike and then we'll see it go. But bearing in mind, the big vested interest really is in selling. So this is a bearish market on the 15-minute chart at the moment, simply because the big buying came in and it was selling. So really and truly, this might be just a minor pullback and the market will be looking to go down. So we can profit in this if we put a buy trade. It'll be a simple buy trade, but we must be on our guard, because at any point in time the institutions might decide to do another round of selling, in which case any profits that will be gained here will be completely lost. But it's an opportunity, so you kind of take it if you're looking to make a few pips along the way. However, I could be entirely wrong, and the institution's running and are prepared to buy at that level. But my analysis tells me at the moment that this is buying volume, and we see a lot of it spiking. So it says to me that pretty much the market will take a slight upturn. But yeah, so that's one analysis of volume. So that was looking at that particular chart. So if I go back in, and let's take gold, which is another interesting instrument. So let's detach this chart so we can stretch it out a little bit, so we get to see what's going on. Come on, stretch. There we go. No, not that way. Alright, fine. So let's have a look. So we see here again what some buying volume popping in. So we see a massive spike, and this to me is definitely buying volume here, and we see a similar spike here, and there's a very low spread. So again, this is extremely high volume, so there's a lot of vested interest at this point in this level here. Right, so a break above will signal that price may move higher. We do see a couple of breaks above, but not much further, and there's some decent volume surrounding it, but it's pretty weak. And we see some more buying volume come in here again, and we see a slight break above, and then price moves up slightly, comes down. But if we note, support is forming around these levels, so price is refusing to break 1285. Now if it does, we could be more than certain it will have to do so on some really strong selling volume. Now we do see selling volume coming here, not as strong as the buying volume though that's been popping in along the way. So potentially what we have here is sellers, selling volume that came in here, which looks like buying volume because of the long tail, but no doubt is selling volume because we see the level break and the price keep coming down, and then it hits some kind of support on very low volume, and then we see sellers move in here again, and then we see the price move up slightly. So what we've got here is an area that potentially is support. So there's a lot of consolidation in this bottom range. So in my opinion, this is buying volume that's come in here, and it's pretty big, and it could to even rival this volume here, which says there could be an upturn in the market, and it's formed a nice support. And we see some more buying volume sneak around here in what looks like a very calm consolidatory range. We see a bit of buying coming in. So for me, this tells me that the market is priming to go up. But there also, another thing we don't quite take into consideration as volume traders is that there are algorithms. So usually algorithms have buy and sell orders around prominent levels like the 200 MA and the 55 and so on. So you kind of expect price to rebound on those levels. It might not be strong volume because most of these algorithms also belong to retail traders, so they tend to kick off here. So we might not see much go on. And as we can see, there's a bit of a volume activity on the 200, and then price starts to fall, and then we see some very strong selling volume coming around here, but it's not enough to actually break the main level here because this volume here is quite low in comparison to the volume that came in here. So we've got nice support here. So 1285 will be a support level. Any stops will be good around here. And if you buy the market at this point, you have to be aware that there's also strong resistance that is formed because of the selling that came in here at 129, 145. So really, a trade will be above the 200 to make sure all algorithms have kind of been kicked out of the game, and a good entry point would be anything above, for argument's sake, maybe 1293, 1294, to be sure that we don't get any algorithms lying just on the top of the 200 with the anticipation that the price might just blast through it and then get hit back down again. So maybe a good point would be just above 1294, which was the major tail. Right, and if we do get price breaking that level, then we are certain that it's going to keep going up. So this is a hold situation. It's a do nothing scenario because now price is locked into a very tight range on the 15. Now we do have to look across other time frames. We can't just look at the 15 minutes because most of the time these are short-term opportunities and they are not always the start of a bigger move. However, they can also be the start of a bigger move, but we will be able to see that once we start moving up time frames. So if we move to, say, for an hour example, now we can see the levels that we marked out on the 15 minute, we can barely see them, and they're a very tight consolidation range, and they sometimes even give a very clear picture of where we sit in the trend. Now we also see that the selling reflected in the 15 minute chart is reflected also in the 1 hour chart. So it means that also there's a vested interest at this level even on the 1 hour chart. So again, we must be very careful. But then we also see that there's also very strong volume here. That's buying volume on the 1 hour chart, similar to the 15, which suggests that buyers really did come in here, and this is definitely buying volume and could potentially send the price much higher. But again, this level must break in order for you to be confident. But again, we also see on the hour chart the 200 is not too far away, so there will be algorithms located here about 1295. So again, it might not be such a great level. You might want to reconsider our previous analysis and look at an entry above 1297. Again, if we took a very short-term perspective, then we won't be getting a lot of pips. You know, there's like 4 pips between actually this is gold, so not 4 pips. There's a considerable amount of pips actually between here and here. So again, we might want to just keep an eye for these levels for retracements, but it's a good opportunity and it's worth a buy. You know, I would take it, and then the price moves up, and then we see how it goes. Or it rebounds, we see how it goes. But I wouldn't be looking to enter anywhere less than 1291, just for fear of being a rebound, more volume, and price heading downwards. So that's another example of how volume can be used to trade. And I used gold as an example. I used the GPP JPY as an example, and this stuff really works. I mean, volume for me is the key to trading successfully. I mean, personally, you cannot pick a successful trade without looking at the volume that is going into that asset. You just cannot. So in my opinion, it's a holy grail of trading, and you've got to use it, and you've got to use it against any indicators you choose to use. You've got to use volume. I personally don't use any. As you can see, my chart is pretty naked. I don't use any indicators. I stick to volume, I stick to price, and that's pretty much me in a nutshell. And my trades work out pretty well, and it's pretty good. So for the most part, I've developed a habit of using volume. I don't use anything else. I consider volume in various different ways, across multi-charts. I consider volume across what's happening in the capital markets. But it's all for me about volume. There is nothing else to it. And even candlestick patterns are all just a visual clue of what volume is actually doing. I mean, if you take this candle here, for example, this is a little cross going on. It's a doji, and this is normally this is like a buying indicator for most people at this level. And to see a doji after 2 red candles that are on falling volume, it's like a really good buy opportunity, and most people actually plummet in. But this is a weekend. This is a Friday price action, so it tends to be weak. I mean, if you saw this price action during the week, then there will be more action. But it's a Friday, so the prices were kind of weak, and this is what it is. But there is a lot of volume piling in, even for a weekend. So it's a good opportunity to be in here for a Monday. A lot of traders don't like to hold a trade over the weekend, just fear of any news popping in over the weekend that could potentially upset their positions. So again, it's a risky strategy to hold over a weekend. But I mean, if you've been looking at markets quite recently, it's not really a risky proposition at the moment to hold over the weekend. So, but it's not something that comes recommended. So if you close your positions on Friday, you got to be up early on Monday to make sure you can reopen them again. Yeah, so that's it really. From my point of view, and hopefully this has been quite helpful for some people who are trying to understand potentially the ways to trade with volume. This is just one of many ways. I mean, some people just follow strong volume, so they don't really even consider like this volume to dictate their areas of support and resistance. They just follow volume. So for example, some people will put a buy order here immediately. They saw strong volume with a long tail, then that's like a buy straight away, and they just buy, no additional confirmations, and they would have made some pips anyway. Right up until the 200, there would have been money made. This is gold, so it's a considerable amount of movement. So it's 10 cents on on for 10 cents on a pip basically, and a pip is the movement on against the second decimal place there. So if you can imagine the speed at which gold moves, you're gonna collect, you know, from 1295 to 1296, you're going to be collecting a fair amount of pips, and that's for like on a 10-ounce lot. I mean, if you're trading like a 100-ounce lot, then you're obviously looking at a lot more money, because you're looking at $1 there a pip, and that's pretty hefty when the price goes up. So gold moves faster than, say, other currency pairs. So again, you need like a strong capital base, a strong margin if you're trading with your margin. You're going to need that definitely. So again, you know, gold is not for the novice, it's for the more experienced, in my opinion, just because you can lose money as quick as you can make it. But again, it's a good instrument, and yeah, you tend to get a lot of movement in gold, and yeah, support and resistance tends to hold fast. So again, it's a matter of opinion really. Right, so guys, have a great weekend. I thought this was good sharing, and yeah, see ya, bye.